I was curious, like, how is the operating a lending business in the Middle East different compared to Europe? What are the key things that distinguish?
It's more profitable and it's easier than in Europe.
Definitely easier.
No, but Jordan is a great country in a sense where it is positioned from not geopolitically, maybe not today, but as in a stage of development it is, right? It has decent population size, it has very good rule of law, the economy is kind of diversified, there are a lot of, how to say, middle income people, right? They wouldn't be considered middle income by European standards, but by Middle Eastern standards they are. And the infrastructure is yet to be developed. So I think from the timing perspective, we are in the sweetest spot there. 5-6 years ago, it was not possible. Now it is possible. And I think we as a company are going to grow together with the Jordanian finance sector, right? And we have quite ambitious plans there.
Maybe from my position, so specifically Jordan is, it's a cash-based economy, so there's a lot of stuff going on in cash. Also, we have lending in branches, as you probably know. We have sales agents and things like that. That are all manual not manual, but labor-intensive operations. So that's what makes it probably different from Europe, let's say, because in Europe it's all very automated and so on. So that's one big thing. And the second big thing, which is massive, is obviously the cultural difference. It's a very different culture, and thank God we have Liga, the CEO of the business. We have a very good local country manager. At the end of the day, very strong by now, very strong executive team, leaders of different departments that took 3 years to build out that stability. And we have a very strong head office here that kind of controls the operations in Amman. But their biggest challenge always has been this, the cultural gap in the country versus how we are used to doing things. Speed of delivering, kind of standards for not excellence, but standards for delivering tasks, right? Are a different understanding between the different countries. So that has been something that we had to work very hard to be on the same page with people on the ground there. And the third thing is that this product and fintech, as I've said, it's a new thing in the country. So we are like miles ahead or years ahead in our know-how, and things that for us are second nature are something that we're very used to. All sorts of ways of running a business, building a company, with the product, etc. We had to train the local team and also the customers that this is how it works and it makes sense, and trust us that it's going to be good. So those things have made it difficult from a kind of people management perspective.
I'll add one more thing about the regulation. So in Jordan, there's a very competent and strict regulator, central bank.
Very smart guys.
To which we have applied for a license, and it seems like the regulator, for many reasons, extended the licensing process. Most probably they just cannot cope with the amount of applications they have there. But it's a very heavy license, so this means a lot of companies won't be able to comply with the requirements and with the capital requirements, and we're in a good position there. So.
Mm-hmm.
All right, there was a lot of good cues that we can pick up on. One of the first things was the geopolitical risk. I'm curious, how do you assess the situation at the moment?
Listen, I think the context and the field of information has to be considered when we talk about these things, right? For Middle East, I think that's what you're referring to, right? The situation is very familiar. Nobody's surprised there, and I think it seems much more, active and important here in Europe because it's multiplied by media. The whole thing. When you are in Dubai, when you are in Riyadh, when you are in Oman, you just pretty much don't hear about these things, right? So there's There is action happening in different places at different times and different intensity. And that has been the case for, 50 years.
Yeah.
And most probably that will be the case for the next 50 years. I don't know. But the region as such is extremely well situated. It's growing like on steroids. I mean, if you want a growth market for any industry, any product, you name it, that's Middle East. And I would not look at that region solely from, there's war happening in many places and it might escalate and things like that. If those things happen to a grand extent, then I think all of us sitting here are gonna have different type of problems, right? We are very sort of calm about that situation, right? From that perspective.
I would argue that also, let's say, the situation in Ukraine seemed like unimaginable many years ago, and the situation that happened still, I see that you're quite often in Jordan, but, do you take any, let's say, precautionary measures, understanding like you're growing quite fast, but is there any, considerations in place on how you can adjust your operations in case, the war should extend in the Middle East?
So we are always making sure that our customer portfolio and our credit risk is in a very good position. I think that is the case. You will speak to one of our risk people later on, and he'll explain you that. Even if we look at Ukrainian situation and what happened there after 22, most of the companies that were well run have survived, and they are back in the game and profitable, right? So even if there is a shock of some sort, it wouldn't be nationwide, and it wouldn't be something of a black swan event from which country cannot recover, right? So that's not the country at risk, let's put it that way. There are other places that are of this risk. There we don't do business, and we don't intend to do business there. So.
Maybe I would add that there are things we cannot control. Obviously, war can spread in many different places. Middle East historically not the most stable for sure. But what we can control is what we do control, which is the quality of our business, of our operations. And if you think about it, where we don't have manufacturing sites and things like that, where we have done like 20 or 50 year investment kind of investments with a long time horizon. Worst comes to worst, in essence, in our business, what we need to make sure is that our client portfolio is bigger and better than the liabilities, the debt that we have taken on to issue those loans. And so if we need to stop lending and kind of cease operations or suspend operations for some time, if force majeure, like worst case scenario comes, we can do that. And we have had very challenging experiences in places like Sri Lanka, for example, which has gone through COVID. It has gone through 60% foreign currency rate drop. What else? Floods. Freaking everything you can imagine that country has been through over the last 2 years, and and we decided to kind of stick through it as opposed to just shut down right from the beginning. And Igor, our Sri Lanka CEO, is managing it very, very, very well. And we have seen there like a shitstorm after shitstorm, and the business still continues and profitably. Like last the whole year has been like profitable. So the point is, we have experience of like going through these very tough situations. Hopefully, nothing like that happens in Jordan. But if it does, we're not the first rodeo, so to speak.
Mm. Do you know maybe top of your head how long the, let's say, average maturities are from the Jordan portfolio?
They're below 30 days.
Yeah,
we have
like
short-term portfolio.
Month,
and that's another reason why we are so confident in this business model, that it can survive through major crises. If you understand that something like that is happening, then you liquidate your portfolio, and then quite fast that can be doable. So.
All right. Yeah, another cue I want to pick up, the way of lending. You said like there's a lot of offline branches, brick and mortar stores. Also a difference, I guess, compared to Europe, where most of the lending business gets more and more automized, I'm assuming. Can you talk about what's the split and what's the share between offline and online lending in Jordan?
offline and online.
Yes.
It depends on what you mean
Looking
by
at the
split.
volume?
Is split in terms of how we attract customers, split in terms of how we issue loans.
Volume, yes.
Yeah. So most of the loans, over 50%, we attract offline. Offline through agents, through branches, and through digital branches, which is cooperation with partners where we set up our branches. And then the issuance of loans, it's almost 100% offline because there are things missing in the infrastructure, like confirming identity online end to end for a customer in Jordan. Either it's like very difficult, or it's almost impossible to do for an average consumer. So it's mostly offline.
And there's another. So you have to think about a cultural aspect, right? I mean, if you go to Egypt, you see people hanging around the cash machines, place where you have cash machines, and I was like, why is that? So they like to hang out in these places, and for whatever reason, I don't know. And then our agent model and our branch model allows the people to have that place where to hang out, and then they like it. This is it's funny as it is, that is the case. So they need a place to go. They need a manager to look at, to tell them how they feel today, and then do the transactions, to get the loan. It is different in different parts of the world. For us, it seems funny. For them, they would say, "Oh, how can you do that without a personal contact, without not knowing who gave you the loan?" It's like totally alien for them. So we just accommodate whatever is the local culture there. So.
You made it sound a bit like, okay, you have a lounge in your branches and maybe some drinks are offered and shisha.
We don't have shisha, but drinks are offered and you can have a seat there, yeah.
Yes, true. And then you can have a number, for the sequence which you're in.
Digital queue.
Digital queue, yeah.
Let's talk about the licensing regulation in Jordan.
Again.
You were pretty excited, according to
Totally
the
excited, man. That's our favorite topic.
But you seem quite confident and excited about this process. Is that something, is that just...
You mean for Jordan?
Yes.
Because we are, so...
What's the difference, maybe? Because I remember from our last on-camera conversation, you were, let's say, expressing your dissatisfaction about the Latvian regulator pretty obviously.
I don't know. So, I mean, my short answer, in Jordan, it's a double-edged sword. So from one perspective, it's a barrier to entry, and it makes your business more stable, predictable, easier maybe to fund, etc. So that is great, and you know where you are in terms of relationship with the regulator. So that we are looking forward to. That's one, and also for the benefit in our specific case, as Darius mentioned, it's a high barrier to entry because of the paid capital. It's effectively like getting a bank license. I mean, I would say probably equivalent. You have to have AML.
How much money is involved?
5 million JOD, 7 million euros paid capital. Yeah, and plus a ton of processes, AML departments, compliance, etc. So from that perspective, we're building kind of moats around the business. From the perspective of you have a regulator that tells you what you cannot and can do. Obviously, it's more difficult, and you are probably slower, and so on. So that's probably the downside in Jordan. But in the long term, more interested in having a regulated business than an unregulated business. For what you mentioned, for Latvian regulator, my stance is, so the Latvian regulator is like overreaching and is extremely, conservative when it comes to all the AML and source of funds, checks and compliance and requirements. And that's it's a disease effectively in the economy. It's a disease because you cannot do transactions from bank to bank, and that everybody knows. It's not my opinion. Everybody has the same absolute opinion, and that is a reaction to the other extreme that we were in before 2014 or whenever the U.S. government came, where we were laundering Russian money like there's no tomorrow. So now we're we had a bit of that going on, man.
A bit of that, yeah.
Yeah, and with the APLV, with these companies, and now we're on the other side of that spectrum where you cannot make a fart and not make a compliance report about it. So that's my take.
Also, I think Jordanian regulator is more pro country, pro their people, so they're very welcoming for the businesses. You know, they in all the ministries we were, and the way we got greeted, it was just like unparalleled. You know, it's like, okay, guys, come over, do business here. It's like, you know,
I'll
bring
give you
your
my
friends.
phone, like,
You know,
let's make it happen.
And I don't think that's the case in Latvia. That's one thing, and for whatever reasons, and these reasons are beyond our reach and beyond our sort of influence. So we don't want to go there. But if you look at Estonian model, and that cycle takes 20 years to prove itself, right? Where you had a lot of startups and very welcoming environment for startups, that created the ecosystem and the unicorns, and now it created all those exits and millionaires and billionaires that are the local people and that like to invest back into their economy and the cities where they came from, and that brings money back. So in Latvia we don't see that trend, or we don't see this type of cycle being developed, which is sad. If you compare Vilnius, Riga, and Tallinn, Riga is pretty much empty place compared to very vibrant life in Tallinn, and nothing against Riga. I love the place, but it's just sad to see what's happening. So
there are some, obviously, lately, last year, couple of years, guys doing startup schools and accelerators and things like that, which is obviously very nice. But yeah.
How big would you say is the market share that you have in Jordan right now?
100%.
Close. Let's leave it.
I mean, depends also what you mean by what market. If you mean unsecured short-term consumer loans,
yes,
then like I don't know,
close
80%.
80.
Like,
Should be 80. I think we are the top player in the country.
Yeah, and if you mean non-banking lending providers, that also include non-banking SME providers, these microfinance organizations, and so on. Then by portfolio size, we're not big at all. There are companies that are on the market for 20, 30 years. They have like hundreds of millions in portfolio. By number of customers, we are also, I don't know, top 5, top 3, something, compared to all those non-bank finance companies, regardless of what product they do, by number of customers. So we have a lot of customers in a short span of time. Yeah.
Interesting metrics. Thanks for sharing. I'm curious, like with the regulation, is it like a mandatory element coming now to Jordan, or?
It's a mandatory element, and there will be no companies operating without a license. The local authorities don't fuck around. It's not going to be, a call from a regulator. It's going to be, behind the bars instantly. So there's a very strong ruler there, right? So there's no ambiguity. You don't have the license, you just don't do stuff. That's very straightforward. And therefore, we are in talks with the regulator to expand our product offering, to expand our sort of, lines of business there in Jordan. Yeah. But
how do you perceive this change? I'm very curious, because understanding, let's say, your starting, your origin, let's say back from the Cream Finance days, when you were pretty much, okay, regulation is really like restricting the non-bank lending sector, and now you're kind of like in this position of kind of affording it and understanding maybe you can cut out a certain level of competition. How do you perceive this transition the last 10, 15 years?
I mean, it's exactly as you said. Ideally, in the beginning, you're not regulated, so you have like runway to become bigger, to start making money, and to have the muscle. And then the regulation comes, and that adds in your favor because you're established and you can afford to have a regulation, and that's a moat. It's a barrier to entry for newcomers. And if you have that timing right, like we have had in Jordan so far, and we have not had it in many other places. Like when we started in Latvia, we came in, we had no money. We were just like 20-something-year-old guys, no understanding of what's going on. And then the same year as we started, or like a year later, the government came in to say, okay, now you have 70,000 license, 350,000 or like €500,000 paid capital requirement, And obviously, guys in Esketit, they were fucking laughing because it's amazing because all the little companies will disappear, and we had to like kind of survive somehow that one, and that was more negative because we had not had that runway, for example.
But as a group of companies, we also evolve, right? So now having the regulation game, it's a normal game for us. All the business, we have so many businesses that are regulated, so we're used to that. All of the businesses we run as if regulated, even those who are not. So we want to be compliant, and we are here for the long game. And I think the real growth will just start happening in some time. And for that, you need a solid foundation. There's no other way around it, right? It doesn't mean that you have to be, over-regulated. Esketit is one of the examples. We're using the possibilities provided by law, right? We're going to do that as long as that's beneficial. At the moment, when it becomes unbeneficial, we're going to do what's required to sustain, grow, and develop the business.